Thank you to everybody that's joining us today. We'll be covering a familiar topic, the Paycheck Protection Program. If you've attended any of our webinars in the past, you'll know that we've done quite a bit going through all the ins and outs of this program. Crazy to think that it's been about a year since the program rolled out, probably a little bit over. The program rolled out quite quickly after the CARES Act was signed into law, March 27th of last year. So there may be some people that actually got their first PPP loan a whole year ago. So crazy to think where we've been and where we're headed. So the purpose of this webinar today is to just go through some updates that have come out since our last webinar, and then go through some helpful tips. A lot of people are thinking about forgiveness. A lot of people are maybe still thinking about applying for a loan now that some changes have been made. So we wanted to go through and make sure that we addressed any of those questions and highlighted some areas where we continue to see some questions come in. So with that, so just to remind everybody, the most recent stimulus bill is the American Rescue Plan Act of 2021. It was a $1.9 trillion stimulus package that was signed into law a little bit less than a month ago, March 11th. In the Rescue Plan Act, actually an additional $7.25 billion was allocated to the Paycheck Protection Program. Some new information since our last webinar where we talked about PPP, March 30th, which was last week, President Biden signed the PPP Extension Act of 2021. What this did was it extended the deadline to apply for a PPP loan out to May 31st. Originally, the deadline to apply was March 31st. There was still quite a bit of funding left. There were still a lot of pushes to extend the deadline because a lot of people were still waiting on additional guidance. A lot of changes had been made over the last month or so. So this Extension Act gives those who weren't sure about applying, those who are maybe have applied and your loan status was in hold while you were waiting to get additional information to your lender. It could have been on hold with the SBA. The amount of hold codes that exist right now has skyrocketed. I think there's about 65 different hold codes that exist that could trip up your loan in the processing. So this extended deadline will really help ensure that any of those loans that are in processing get processed. And it also allows for those that weren't sure about applying, but have determined that they would like to apply, it gives them that additional time to get in and do that by May 31st. In addition, a really important part of that Extension Act was that the SBA actually has an additional 30 days beyond May 31st to process all of the loans. Again, if you've attended our webinars or if you've been keeping up with the news on PPP, you'll know that there are a lot of loans that have been stuck in processing. After the PPP program rolled out last year, there have been a lot of audits and reviews of the process. And so this year they wanted to ensure that any fraud, anything that shouldn't have been happening with the program wasn't happening this year. And that manifested in a lot of additional work done by the banks when you apply for the loan, making sure that they're validating information that they receive, asking questions that they may not have asked. If you applied for a PPP first draw loan last year, you may be getting new questions from the lenders. All of that is to be expected. Again, they are trying to eliminate any potential for fraud, which we did see unfortunately happen last year. And so there are a lot of new measures in place to keep that from happening at both the lender level and the SBA level. So this extension gives borrowers more time to get their loans through, and it also gives the SBA more time to process these loans. So great news that we got last week. So a few stats. This is the most recent set of information from the SBA. The most recent data available is as of March 28th. So about a week or week to 10 days behind, but it should still be pretty close to accurate. So again, crazy to think that it's been about a year. And in that year, over 8.7 million loans have been issued, totaling over $734 billion. Hard to even wrap your head around those numbers. In 2021 alone, we've seen over 3.5 million loans issued, totaling about $212 billion. Again, as of March 28th, approximately $72 billion remains available. I have heard on different webinars that there is potential that that funding may actually run out before May 31st. So again, if you're contemplating whether or not you should apply for a first draw loan, if you haven't applied at all as part of the program, or if you determine that you are eligible for a second draw loan, make sure you start getting that in. The reality is there are quite a few loans, like I mentioned, that are in processing. So these totals don't include those loans that are in processing. So there's probably a substantial amount that's not included in these totals. So you want to make sure that you get your application in as soon as possible. So a few additional updates related to some of the news that has come out due to the application extension, so that PPP Extension Act. Now that we have until May 31st to apply for a PPP loan, there is potential that if you applied for a PPP first draw loan this year in 2021, that you may actually be eligible to apply for a PPP to a second draw loan this year. So I'm going to say that again. If you received a first draw loan this year, you may actually be eligible to apply for a second draw loan this year as well. So if you received a first draw loan in 2020 and you've already received a second draw loan in 2021, you would not be eligible for a third PPP loan. The maximum is 2. And there is potential that you may not be eligible. It may depend on the lender and how they're processing applications. We haven't gotten solidified guidance, yes or no, but there is potential if you are using your PPP first draw loan, you got it maybe the end of January, early February, and you're getting close, or maybe have surpassed 8 weeks and you used all of the funds, you may be eligible to apply for a second draw loan. Again, it may be based on fund availability. It may also be based on how your lender is processing those applications. But just wanted to make sure everybody knew that there is potential that could happen. And a reminder that some of the American Rescue Plan Act included expanding eligibility for not-for-profits. So technically all not-for-profits listed in Section 501C of the Internal Revenue Code are eligible. However, there are substantial lobbying activity thresholds that you have to keep in mind. So that may automatically disqualify certain types of 501C organizations. Typically C4s would tend to have a lot of lobbying expenses, so they likely won't end up qualifying. So the lobbying activity thresholds include organizations that receive more than 15% of receipts from lobbying activities that comprise more than 15% of your total activities, and if your cost of lobbying activities exceeds more than $1 million during your most recent tax year. So if you hit any of those thresholds, you are not eligible for a PPP loan. Internet-only news publishers were also made eligible as of the American Rescue Plan Act. And we'll go through again the updated loan calculation for Schedule C filers, which is now more in line with the updated calculation that Schedule F filers were able to start using as of the Economic Aid Act in December of last year. So we did go over this in our last full presentation, but this is important, so I wanted to make sure that we covered it again. If you are a Schedule C filer, and you have either no employees or you have employees, there is actually a new loan calculation that you can use. And this is to potentially increase the amount of your loan prior to this change. And this change came out in early March, I believe. So this currently still is not retroactive. So if you are a Schedule C filer and you applied for a first or second draw loan prior to this change, which again was the beginning of March, you cannot go back and amend the amount or request an increase in your PPP loan. This is only for the date that it was signed into law and going forward. So essentially, what Schedule C filers can now use to calculate what we would call an owner compensation replacement is that they're able to use gross income instead of net income. Prior to this change, A Schedule C filer, for example, that had no employees and had a net loss was not eligible for a PPP loan. So this changes that. So it is a substantial change. So if you are a Schedule C filer and you have no employees, you are able to use either your 2019 or your 2020 gross income. So that's line 7 on your Schedule C. That gross income needs to be capped at $100,000. So if it's more than $100,000, you've got to cap it at $100,000. And you're going to take 2.5 of 12 months worth of that gross income amount. So the maximum loan you would be able to receive is $20,833. And it can be used on any eligible covered expenses, including what they're now referring to as proprietor expenses, which can also include owner compensation replacement. So essentially, you could receive that loan and use that to pay yourself, the Schedule C owner. So that's a huge change from what the rules were before. If you are a Schedule C filer with employees, you can still use that gross income number, but you also need to include the payroll costs for your employees. So you do the same calculation that you had done before using eligible payroll costs for your employees, and then you'd use that owner compensation replacement using gross income, but you need to back out from gross income those payroll costs that you're already including to calculate the amount for your employees. So we've got the description there, but for many, this could mean a huge increase for Schedule C filers in the amount of the loan that you received. So again, if you are a Schedule C filer and you have not yet applied for a PPP loan, first or second draw, just know that this new calculation is out there. You still can use net income. If your net income was $100,000 or more in 2019 or 2020, and you're eligible for the PPP loan, you still can use net income as your amount. But this other option is there for those that maybe see break even or they see a net loss year over year. This allows you to request additional funding. There is a new form specifically for Schedule C filers. Most banks have an online portal for you to apply. So just make sure that you're using the right form when you do apply for the loan. There is one that is specific for Schedule C filers. So I wanted to address a few areas where we've continued to see quite a few questions. One of those is owner-employee compensation rules. So owner employees were a dicey topic for a while. We didn't really get a definition, I think, until, my goodness, I think it was late last year when we finally got a definition of what an owner employee was. So this is a reminder that owner employees, and this relates to S Corporation and C Corporation owner employees. If you have a partnership, your partners cannot be considered employees. If you're a Schedule C owner, you cannot be on payroll. You're not considered an employee. And if you're a nonprofit, you don't have owners, so this doesn't apply. But for S Corporation and C Corporations, owner employees are defined as those that own 5% or more of the business. Those owner/employees can use PPP funds to cover their wages up to a maximum of the greater of their 2019 wages or $100,000. And again, you have to calculate the amount, so 2.5 of 12 months times that amount. So essentially you're capped at, let's say in 2019, I'm a 50% owner of an S Corporation. In 2019, my salary, so what was reported on my W-2, was $80,000. So when I go to apply for a PPP loan and I'm looking at my salary, that I'm going to base it off of that $80,000. So this year, maybe I'm making $100,000. Well, I can only use the PPP funds to cover up to $80,000 on an annualized basis based on the prorated amount of my covered period. Up to 2.5 of 12 months times that amount. So you're capped at your 2019 wages if you made less than $100,000. Otherwise, that $100,000 annualized, that cap remains in place. If you're using a covered period that's anywhere between 8 and 10 weeks, you also need to make sure that you're capping it at the prorated amount of your 2019 wages. So what that means is, in that example, if I've made $80,000 in 2019 and I decided that my covered period was going to be 9 weeks, essentially I can only use the PPP funds to cover 9 of 52 weeks worth of that $80,000. I can still get paid more by the company, but I can only use PPP funds to cover 9 of 52 weeks worth of my 2019 wages, that $80,000. So just make sure that you're keeping that in mind when you're applying for forgiveness. You need to make sure that those caps are in place. If you're using a covered period that's approximately 11 weeks or greater, 11 weeks ends up being about 2.5 of 12 months of the year. That cap is in place. So you are limited to $20,833. That's the largest amount. And that's, again, if you were paid $100,000 or more in 2019. The total amount of PPP funds you can use towards your owner employee wages is capped at $20,833 if your wages were $100,000 or more in 2019. So that's a lot to think about, but you do need to be thinking about those things. The bankers will be looking at this. The SBA will be looking at this, and you need to make sure that when you're applying for forgiveness, you're limiting your owner employees correctly. Another hot topic, of course, has been FTE, which stands for full-time equivalent reminders. So I continue to get a lot of questions about calculating FTEs, the safe harbors, and the reduction exemptions. So I just wanted to highlight a few areas to be thinking about. As a reminder, one FTE for purposes of PPP is an employee that works an average of 40 hours or more per week. This is important because if you have attended any of our other webinars, or if you have applied for other funding or some of the credits that exist, you'll know that that one FTE count is different depending on what funding or what credit you're applying for. So it's important to make sure to keep these straight because you want to make sure you do your calculations correctly. So for PPP purposes, one FTE, one full-time equivalent employee, is an employee that works an average of 40 hours or more per week. You can't have a person be more than one FTE. One per person is the max. There are also safe harbors, and these are specific to 2020. As far as we know right now, most of the guidance for applying for forgiveness for PPP2 will be relatively the same. However, you'll notice some of these safe harbors are very specific to dates in 2020. So the likelihood is once we get through this additional push of PPP loan applications, we will maybe get some updated applications for loan forgiveness for loans received in 2021. This is due to the fact that these dates are very specific to 2020, and so far they have not been updated for 2021. So I would expect that we'll get updated information. So again, these are safe harbors for 2020. So if you received a PPP loan in 2020, these safe harbors will apply. So if your organization was unable to return to the same level of business activity that you had prior to February 15th due to compliance with government mandates related to COVID. So these can be local Department of Health mandates, if they're statewide mandates, they're federal mandates. If you were unable to return to the same level of business, so maybe the capacity inside your store or your restaurant was limited, if you had to be closed for any period of time, you would fall into the safe harbor. And basically, it's going to eliminate the need to calculate any reduction in loan forgiveness based on a reduction in FTE count. The second safe harbor is a two-step safe harbor. So the first step is that you may have reduced your FTE levels between February 15th and April 26th of 2020. So if we think back a year ago, which probably many of us don't really want to think back to a year ago, but if we do, that period of time was really when the pandemic was taking a turn for the worse in the US. And so many people weren't sure what they were going to do and may have laid off quite a few staff. But then once some of the stimulus bills started rolling out, people were able to get some money back in the bank, and perhaps business picked up by the end of the year. The second step is that you were able to restore your FTE count by the end of last year to the levels that they were at as of February 15th. So that's the second safe harbor. So in both of those scenarios, if you were able to meet one of them, you would not see a reduction in your loan forgiveness based on a reduction in FTE counts. The other item you want to make sure you're taking into consideration are the reduction exceptions. So there's safe harbors and there's exceptions. So the reduction exceptions, so again, these are reasons that you would not be docked loan forgiveness for reducing FTEs. So if in your covered period, let's say you had laid somebody off prior to receiving your PPP loan, you get your PPP loan and you make a good faith written offer to rehire that employee, but the employee chooses not to take it. That will not go against you. If you fire somebody for cause, if an employee voluntarily resigns or requests a reduction in hours, and if you make if the borrower makes a good faith written offer to restore a reduction in hours, but the employee rejects, or if you are unable to hire similarly qualified people for the unfilled position by the end of the year, those are all reduction exceptions. And again, they will not reduce your loan forgiveness due to the fact that you may have actually seen a reduction in FTEs in your covered period. So make sure you're thinking about those situations. Loan forgiveness is not automatically going to be reduced because you reduce your FTEs. You may fall into any one of these safe harbors or reduction exceptions. So those are important to keep in mind. So last, I'm just going to go through a couple of tips when applying for forgiveness. I can tell you that many lenders have not been as actively accepting loan forgiveness applications over these last few months. There are a few reasons for that. The first reason is that many lenders have been focused primarily on getting new loans, so first or second draw PPP loans out the door. Processing these loans and the forgiveness applications take quite a bit of resources. So banks have been, as many of us have been, stretched pretty thin with all of the new guidance and everything that has come out. So just keep that in mind. It's important to stay in touch with your lender because you want to know when they're updating their systems, if there's going to be a blackout period, just things to keep in mind. Keep in touch, continue to visit your bank's website and make sure that you kind of have a lay of the land. Many banks have a portal that you need to register for. So make sure you're familiar with that if that is a piece of the puzzle for your lender. One key is to be over prepared. Documentation being key. I think we've said this ad nauseum for the last year, but documentation. Coming from accountants, that may seem like something we just say, but I have to tell you again, I'm speaking from experience, having answered questions from lenders and having worked with quite a few clients that have struggled with applying for forgiveness over the last few months. It is so important to be over prepared. Have more information than you think you need, have more information than may even be required. There are some lenders that are asking for things that are not included on the application instructions that tell you exactly what you'll need. So you just need to be ready to provide them with anything. Documentation. Ensure that your backup source documents match the amounts that you reported on your application. So for example, let's say you're reporting an amount for rent. Make sure that you have your lease agreement and that the amounts that you paid match what's in your lease agreement. If you have canceled checks or receipts or invoices, make sure that those amounts match what you reported on your loan forgiveness application. If they don't, it is more than likely that the lender is going to come back and ask you follow-up questions, or they're not going to accept that required documentation. Again, I'm speaking from experience in having dealt with a number of clients that have struggled getting through even just the bank application process. Bankers are trying to cover their butts, so it's totally understandable. They want to make sure that everything you submit is correct. There's no fraud involved. They want to make sure that everything is in place. And things have ramped up and stepped up quite a bit. If you applied for loan forgiveness and got it relatively quickly last year, the likelihood is that's not going to be the same scenario this year. Both lenders and the SBA are taking a little bit longer to verify information and make sure that all information is correct. So just ensure that you have good backup source documents. Make sure you read through everything that you're signing and initialing. It's easy to, just want to get through the application, initial on all those attestations, sign off on the bottom line. But it's so important to make sure you read and understand what you're signing. You are attesting to quite a few things, regardless of which application you're filling out. So you just want to make sure you have a good handle on it. Every potential PPP borrower, every PPP borrower has the potential to be audited. It is not just borrowers that received $2 million or more. Everybody is open for review. So just make sure you know what you're signing, you know what you're initialing before you actually submit that loan forgiveness application. Make sure that you're evaluating whether or not the employee retention credit is applicable to you. The employee retention credit is huge. I cannot stress that enough. The employee retention credit is massive. If you are eligible for the employee retention credit and you received a PPP loan in 2020, or you received a PPP loan this year, there is an analysis that you need to do to make sure that you aren't double dipping, that you have, you've isolated the wages that you're using for each, the PPP application and for the credit. So make sure that you're thinking about that before you submit your PPP application. Once your PPP application is submitted to the lender and they pass it on to the SBA, there's no going back. So you cannot make any changes, any amendments to your PPP loan application. So make sure you've got everything covered. You've maximized the benefit of all the programs that are available to you before you submit your PPP loan application. And make sure you're available to answer your lender's questions as soon as possible. Like I said, chances are they are going to have some. They're asking more questions this time around to prevent anything bad from happening. So just make sure you're available and you're answering those questions timely. Last thing, make sure you know which loan forgiveness application you qualify for. There are currently 3 loan forgiveness applications out there. Form 3508S is the easiest, although there are still some things you may have to do if your loan was over $50,000 and under $150,000. But the 3508S is for all loans of $150,000 or less. Form 3508EZ is that middle form. That's for loans over $150,000 that meet specific eligibility. If you aren't familiar with that, I'd highly recommend going back and reviewing some of our past webinars where we dove into some of these forms in much more detail. And then that should say Form 3508. I apologize. I'll update that before we send this PowerPoint out. But the final form is just Form 3508. And that's for loans over $150,000 who do not qualify to file Form 3508EZ. And with that,
we got a couple of questions for you, Kate. I'm going to ask you one, and then we're going to unmute one of our participants to ask you his questions directly.
Sounds good.
If a company is purchased by new owners in October of 2020, do they qualify for any PPP loans?
So they do qualify for a PPP loan. There are quite a few additional, I'll call them hoops, that you have to jump through. There is a procedural notice that was issued by the SBA and the Treasury that is specific to companies that had a change in ownership, were purchased or sold. That's probably a good one to follow up with after to go into some of the details, and I can send that. So maybe Melody, we can just note that registrant's email, and I can follow up with them after for more specific details.
And then Kristen, can you please, Brendan, go ahead and ask your question.
Yeah, hi, thanks. Appreciate this. Yeah, one of them was, I just was hoping for a little bit more, maybe an example for that slide around the PPP loan calculation for Schedule C.
Sure.
I was trying to follow exactly what you were sharing for Schedule C with employees.
Sure. So if you have employees, I'll go back to that slide. So essentially if you're a Schedule C with employees, what you'll be able to do is use for your owner employee compensation replacement, you'll be able to use your line 7 of Schedule C of your 2019 or 2020 tax return. If you haven't filed your 2020 tax return, but you want to use 2020, you need to make sure that the Schedule C numbers that you use are going to be identical to what you file. So that's important. But you're going to basically take line 7 of your Schedule C, which is gross income. So that's before any of your other expenses. And then you're going to subtract out the employee costs because you're already going to include your eligible payroll costs. So if you take your eligible payroll costs, you're going to take the wages, the employer paid portion of retirement contributions and health insurance costs to calculate the amount that you can borrow for your employees. And then for that owner compensation replacement, you'll use that line 7 of Schedule C. So let's say it's $100,000. Your gross income for 2019 is $100,000. You'll take $100,000 and let's say the total of lines 14, 19, and 26 on your Schedule C, which again are wages, 401k, retirement contributions, and employer benefit programs expense. So things like health insurance. Let's say the total of that is $50,000. So you're going to take $100,000 minus that $50,000 in expenses, and that's going to be how you calculate your owner compensation replacement. But then you get to add back in those eligible payroll costs. So essentially you're going to get back to that total of $100,000. But it's just a different way to go about it. You'll have to, when you fill out the loan application, you'll have to indicate if you have employees or if you don't have employees and indicate these separate costs. Again, it's a different form for applicants that file a Schedule C. And I believe it's actually a separate form if you have employees or if you don't have employees, or it may just be a checkbox. But you're essentially going to get to the same amount either way, because one is just breaking out the cost for your employees. The other one, if you don't have employees, you're just using that gross income line. But this slide references the exact lines on your Schedule C that you would be taking into account. And the form, let me just, I would like to just give you the number of the form, PPP Schedule.
I appreciate it. And just as you're looking for that, Kate, this is why I'm on here, because this is confusing. Sometimes I don't know if I definitely qualify in the way you're talking about. I have a Schedule C in my, past two, in my tax returns.
Sure.
But Schedule C line 7 doesn't seem like the line you're talking about. Dividends from 20% or more, foreign corporations.
Nope. So it should be the gross income amount. So let me just pull that up.
And sorry, this is getting in some detail. It may or may not be applicable for others.
That's okay. And if I don't answer all your questions, you can follow up. My email's at the end of this. My email is at the end of this presentation. So you can reach out to me afterwards too. So it should be, and Melody, can you see this? Can you see this?
Yes.
Yep. Okay. So this is the schedule, the form Schedule C. So profit or loss from business from the form 1040. So this line here, this line 7, gross income, that's going to be.
Oh, okay. This is for the individual's tax return.
Correct. Yep.
Okay. I'm sorry. I was thinking about the business tax return.
Nope. So this is, so Schedule C filer is somebody that reports their profit or loss from business on their form 1040.
Okay. Yep. My mistake. Appreciate that.
Yep. No problem.
Great. Thank you, Kate. The other question, I think you can follow up the one that we were working on a little bit after the fact, and that takes care of the questions.
Great. Kristen, did you want to sign us off for today?
Yes, I do. Thank you everyone for joining us today. Just a notice, if you were signed up for tomorrow's webinar on the restaurant revitalization fun topic, that we are going to postpone that session. We're waiting on some new information and new guidance to come out on that. And so we're going to postpone that webinar until after that guidance is received, and we'll keep you informed on when that's scheduled. But we do still have another webinar on Thursday at 10 o'clock, and that one is on the economic injury disaster loan. So if you haven't registered and you're interested in that topic, head over to our website at wagnercpas.com and register yourself for that one. We'd love to have you join us. So keep an eye out for later today. We'll send you the recording for this webinar and the slide deck. Thanks, everyone. Have a great day.
Thank you.